The screen goes black. A voice cuts through the silence. In 2008, the world's financial system teetered on the edge of collapse. Millions of Americans lost their homes. Banks that seemed untouchable crumbled overnight. And it all began with a single promise: easy money for everyone. In the next 10 seconds, the viewer sees flashing images of foreclosed homes, desperate families, and ticker symbols spiraling downward. The tension is immediate. The question lingers: how did the housing market, the foundation of the American dream, turn into a global nightmare? This isn't just about mortgages. This is about greed, miscalculation, and a chain reaction that shook the entire world. The story begins in the early 2000s, when housing prices were soaring. Low interest rates and a booming economy created a sense of invincibility. Banks and mortgage lenders started offering loans to people who, under normal circumstances, would never qualify. These were called subprime mortgages. Key players like Countrywide Financial, Lehman Brothers, and Bear Stearns saw an opportunity to profit by bundling these risky loans into complex financial products called mortgage-backed securities. Investors around the world bought them, believing housing prices would always rise. The stage was set, a fragile financial house built on sand. As the market grew, the boom seemed unstoppable. Banks competed to issue more loans, often with little regard for borrowers' ability to repay. Home ownership became a dream marketed to anyone with a pulse. Mortgage brokers earned huge commissions. Rating agencies handed top grades to the riskiest loans. And investment banks packaged them into exotic securities that seemed safe. 4 years, profits skyrocketed. Housing prices doubled, even tripled in some cities, creating an illusion of endless wealth. The system fed on itself. Rising prices justified more lending, which fueled more prices, a self-reinforcing spiral of confidence and debt. But cracks started appearing. Borrowers began defaulting at alarming rates, especially in states like California and Florida. Adjustable rate mortgages reset to higher interest rates, leaving homeowners unable to pay. Banks had underestimated the risk. The complex securities were opaque and fragile. Lehman Brothers, heavily invested in these toxic assets, started to wobble. Regulators were slow to act. Warnings were ignored because for years nothing went wrong. Then small tremors turned into massive shocks. Foreclosures surged. Housing prices plummeted, and panic spread through Wall Street. The collapse was sudden and brutal. In September 2008, Lehman Brothers filed for bankruptcy. It's the largest in U.S. history. Banks stopped lending to each other. Stock markets around the world plunged, and credit markets froze. Millions of Americans lost their homes as foreclosures skyrocketed. Retirement accounts and savings evaporated. Governments had to step in with massive bailouts to prevent total economic collapse. The effects rippled globally, triggering recessions in Europe, Asia, and beyond. Countries that had invested in U.S. mortgage securities suffered massive losses, showing how interconnected the financial system had become. In the aftermath, the world was left questioning how it could happen. Banks were restructured or collapsed. Regulations like the Dodd-Frank Act were introduced to prevent such reckless lending. Homeowners struggled for years to rebuild wealth. Some investors profited from short-selling mortgage securities, but for most, the crisis was a devastating lesson. Unchecked greed and poor risk management can destroy even the strongest financial systems. The housing bubble wasn't just a market failure. It was a societal warning about complacency, complexity, and a dangerous belief that prices can only go up. In the end, the housing market meltdown was more than numbers on a balance sheet. Was human lives, shattered dreams, and a global economy forced to its knees. The lesson is clear. In finance, nothing is guaranteed. The higher the rise, the harsher the fall. And when the foundation is built on risk disguised as opportunity, the consequences can be catastrophic. History didn't just record the crash, It warned the future.